Hello everyone, welcome back to my YouTube channel. It's a pleasure to see you guys here. Sorry, last month I wasn't able to upload any new videos for the November update, but now we're in December. I'm just about finished done with my finals. So yeah, last time if you took a wheel strategy, last video you were learning what a wheel strategy was. If you took this trade with me, congratulations, we got assigned around $12. We got 100 shares of American Airlines, and we sold around here like 14-ish dollars, and we made around 20% return on this wheel alone. So congratulations for taking this trade. As you can see, yeah, so we completed this entire wheel. We got assigned 100 shares at 12, and we covered called out and collected premium both ways. So as you can see on my Robinhood, yeah, we have no more, right? We're out of American Airlines. The only wheel I'm still running is Archer. So, as you can see over here. Over here, I ran a $10.50 cover call, so I'll be making that. You see me actively making a premium on this. And yeah, thankfully I'm still kind of up on my Archer position. I got a pretty good average getting into this wheel. So yeah, so today instead we're going to be learning what I was doing today. So you might see my portfolio up a bit higher. I actually added some money from my job, and I freed up some capital that is expiring. We're going to be learning what put credit spreads are. So I was a bit aggressive. I put $1,500 into Adobe put credit spreads, and yeah, they're basically like aggressive sell put options, right? But it's only half the wheel, so you cannot get a sign on put credit spreads, but they could return a really high ROI. So instead of putting the collateral to get assigned 100 shares, you're buying a put to sell the put. So it could give you a, like if you buy a lower put to sell a higher put, you could get a crazy return. So instead of a 3 to 10% ROI, it could be more like a 10 to 50% ROI. So let's learn what a put credit spread is, and let's master being the option seller. Okay? So let's get started. All right, boys and girls. So over here, you see that I had two strategies, right? I closed actually one, right? Because this 320, 315 pay me a pretty good, right, ROI. So I mean, it's almost right expiring worthless on this trade setup. So I closed this one also. So I had three put credit spreads. So it was a 300, 305 put credit spread. I caught that on this move leg down, right, this week, November 28th. So almost December. So a few weeks ago, that was the last DCA I made. So pretty much put credit spreads are basically getting premiums, right? We're getting premiums selling the market, selling the puts options, right? People want to short. We're like, hey, we're going to catch your premiums, guys, but we're going to catch the silly shorters who want to short at support zones. So we collected a pretty decent premium over here. But the difference is, right, we cannot get the price to close below our break even. So if we, on these spreads, right, if the price closes, so this is December 19, if the price closes below 320 by my expiration date, then I will lose. So I'll be losing money, right? And so think of put credit spread as a way to get premium on the upside and downside, similar to the wheel. It's kind of like the wheel, but you cannot get assigned. If you get assigned, you lose, okay? Instead, for the wheel, getting assignment is part of the game, so you can complete it, like we showed you with American Airlines. So these were the spreads that I took. We're gonna make like $600 on spreads. So good thing about put credit spreads is that it's cheaper than wheel. Instead of having collateral to own 100 shares, I use I buy a put option, a lower put option that's out of the money, and I sell it higher. Okay. So when Adobe expires, I'm going to be setting up for a new put credit spread. I'm excited for it. I'll be showing you guys. It'll be Trade Desk. So over here, right, you can see where I drew the Elliott wave over here. So we can see over here, 1, 2, So same thing, right? We cannot get assigned on these put credit spreads, otherwise we lose money. So I'll do them in really, right, high opportunity, right, high probability setups. So for Adobe, right, I could get 40%, 40 to 50% ROIs. I collected 44% ROI on that setup. For TTD, I could run wheel on TTD, but it's also kind of expensive on my 8K portfolio. I don't want to be holding like over $3,000 into TTD shares, okay? But instead of running wheel, right, to collect maybe 3 to 10% ROI, I could run a spread to collect 50% ROI. So I'll be showing you guys how to do that. So over here, TTD, we got a historical zone from 2020. From this leg, right, it's a pretty good, I guess we could draw harmonics pretty wellly on, right, the pandemic lows, right? We're forming a lower low over here. So this is a pretty high probability setup. So I'll wait for price to go around low 30s, and I'll probably start DCAing into put credit spreads for TTD. So I'll share with you guys how to do that today. So over here, we'll click the ticker symbol TTD on Robinhood. So I'll go to trade TTD options. So an easy way you could do this, right? If you don't want to do it manually, right? You could hit builder, and we have a setup put credit spread ready for us. So let's go to February 20th. So this is going to be a demo of how I would enter these trades. Don't enter it now because I want the risk reward to be better at around this strike price, okay? So I'll probably pick one of these, right? This one looks pretty good. This one looks pretty good also. I'll probably pick one of these, a 30 to 27.5 put credit spread, or 27.5 to a 25 put credit spread. So as TTD hopefully goes lower to near our entries, these premiums will be skyrocketing. You see how, right? We're gonna put out of the money, right? 36. We're at $36 right now. Over here, so far this is not too bad of a setup, right? You could use a calculator. You could use $71, right, premium, and this trade will take $250 of collateral. And you see the power of put credit spreads. So this one will give you yield a 28% ROI, but you cannot get assigned, right? If I were to only run wheel, if I were only to put a cash secure put for this, you can see, let's go to February 20th, right? If I were to only run a wheel, then it would need a pretty high collateral. So I would need $2,750 to collect 136. So 136 divided by 2750. So this will give you a 5% ROI. Not bad, right? For a wheel. This will be pretty good if you want to be a spot trader wheel. Not bad for wheel, but for someone who wants to grow their small portfolio, right, 8K, I'll be leveraging using spread options. But the only difference is I cannot get assigned. So I gotta use high probability setups where I cannot get assigned and make hopefully have a good ROI. So Adobe was a good example of that. So this is how I'll do it manually, right? So I'll get out of option builder. Let me see. I'll go to TD Trade Desk, right? I like Trade Desk as a good company, good fundamentals. People are scared, just like Adobe a couple weeks ago for no reason, but we use historical levels and harmonics to make good setups. So this is how I'll do this manually. Again, don't enter these trades just yet. The risk reward isn't there quite yet. So I'll wait. Join Kaizen Premium online. Join Kaizen on the financial chat. I'll be sharing when I'll enter these trades, okay? So I'll buy a put, let's say $30, right? This is a very cheap put. Hang on, sorry, I'm in the wrong date. So let's go to, right, we're gonna sell them out of the money for a long duration, right? So let's say I'll buy a put 137, sorry, let's do this one. 27.5, and I'll sell this put higher. You see this one is going to be a long put, so I'll be shorting the market. I don't want to short the market, okay? I'm trying to get some passive income selling this premium, selling the puts, right? So I'll buy a put lower and sell the put higher. So if cash secure put would just be a sell put, so I wouldn't have this. So cash secure put, if I were to do this, right, I would need $3,000 to collect $164, right? But instead I'll be buying a put and selling a put higher to make this difference. So right now it'll say $71. It's a weekend, but so the price will be different on Monday, right? Depending on how the market trades. But I did the math, right? So if I were to enter this right now, it'll be $71 over 250, and this will be 30%, around 30% ROI. But I did the math, right? If we were to wait for this price to go around to my entry, right? So 36 to near $30, it'll be around 50% ROI. So it's good. You can see how much more powerful this is than the wheel strategy. But you gotta be careful because you don't want to get assigned. Because if you get assigned, you lose, right? You cannot, right? You're buying a put option to sell against. You cannot get assigned on your cash secure put anymore. So you technically lose money, right? You could lose pretty big, but the risk to reward is really high, right? So if I'll wait for the TDD to drop a bit lower, and the risk to reward, you'll see this bar going higher, and the risk to reward for selling out of the money put options, put credit spreads, will be very, very nice. So I could get 50% ROI and probably have a max drawdown, right? Max loss of 40%. But I have really good confidence in these setups, so that's why I do these put credit spreads. So pretty much again, if I were to take this setup, right, I do not want price to be closing below 27.5, otherwise I lose money. See, if it closes below 27.5 over here, I'll be in the red, alright? I'll lose money, the max loss. But if I keep the price above $30 in this setup, right, then I make the full premium. So hopefully something like this will make sense. Okay, let's take a look at some of the stocks that you guys were asking. Some guy asked me Netflix, right? I think they bought Warren Brothers or something, Warren Bros on the movie side. You see this as an Elliott wave, a really pretty clean Elliott wave, right? I want it to go back down to this golden pocket, hopefully. So this is from 2022 bear market. We made a pretty heavy drive down. Hopefully Tom Lee is right. We get a bubble, right, on these companies, and we come back down. We could get $60. Other than that, I would not be interested in buying Netflix, alright? So an update on my stock portfolio, I bought a lot of, right, in my 8K portfolio, I bought a lot of Meta. So this is going to be my backbone to my portfolio. So I'll be running wheel strategies if I see them, right, like my American Airlines. This one, GUR, I'm also in a wheel strategy. So I couldn't sell my shares yet, but hopefully this frees up so I could have more collateral on my trade desk wheel. So or put credit spread. Come on, bro. Okay, there we go. Yeah, so Meta is my backbone of my portfolio. I bought a lot of Meta, right? Every time it dips, I bought some, and I'm still interested in buying this. And an update to my portfolio, right? If you saw that my LUV, right, my $5 a day, American Airlines and Southwest Airlines, maybe it's the holidays or whatever, that also went up too. So my dividend stock is treating me very, very well from October. So if you watched the last video, you'll see me daily dollar cost averaging into LUV. So we are up 25%. So congratulations, guys. if you're buying Southwest Airlines with me, alright? I'm happy to help you guys out. So, Southwest Airlines and Amazon. So this is a stock that I'll be DCing daily into. You see this one, Southwest Airlines, $5 a day. Amazon, also $5 a day into Amazon. So let these run over time. Reason why I like Amazon, also I'm kind of interested into Uber, right? Is because younger generations are so into instant gratification. They're too lazy to go outside buy stuff, right? From the stores. We'll buy things from Amazon or buy things from Uber Eats. So I actually deleted that app. I downloaded Uber Eats, bought a couple of food. I'm like, this thing is too addictive for me, so I deleted Uber Eats, guys. Maybe I'll download it each time I actually need Uber Eats. But those are one of the stocks that I like. So if you look at Uber, yeah. So Netflix, I'll only be interested if we go to $60. Okay, golden pocket zone. Otherwise, I'll be boycotting Netflix with Elon Musk, okay? If we look at some other stocks, see Uber, right? I'll wait for it to go into this zone and I'll probably buy some. $70. See? This looks like a pretty good zone also. So now let's look at some stocks that you guys are asking. So let's look at Nvidia. So over here, right, we have a really insane run up. Look at this. From the panic dip over here, we made very big moves to over $200, and now it looks like we're making, I guess, like a head and shoulders type of thing. I wanted to retest back the previous all-time high from November 2024, so this is probably an area I would buy, but there's no guarantees, right? Nvidia is a strong company. Hopefully the Michael Burry bubble or whatever could spark a little move down. But yeah, so someone was asking me leverage Nvidia. I wouldn't be buying leverage Nvidia just yet. Like, look at price market structure. We're making the lows, right? Look at this bear flag over here. I wouldn't be leveraging into these stocks just yet, alright? See, bear flag. We'll take this leg perfectly. If we were to draw this bear flag out perfectly, see, we broke the neckline of the bear flag right for now. And look, perfect retest, perfect leg down, back to retest all-time highs. You see this? See, 1, 2. Oh, sorry. So 1, 2. Okay. So that'll be, that's just gonna be my idea for Nvidia, right? Got possible heads and shoulders. Okay. But insane run up from, look, people are panicking. I don't know why, but this was an insane run up. We did over a 2x. Okay, another ticker, Dole, okay? Someone was asking me this. It looks really solid to run higher, guys. Yep. So over here, you can see from the bear market 2022. So I guess two zones that you could do, right? You could anchor the lows if you're using the harmonics. Yeah, share me some like tickers or anything you guys are interested into. Because I'm actively looking for hunting down like trades we could use for wheel or put credit spreads, right? You could use spreads to grow an account, wheel to compound slowly, right? To like dividends on steroids. So over here, you see how we're making lower highs, no, higher highs, higher lows. We have this, we flip this zone of right resistance into support. See how it bounced, rejected again. We flip this zone into support, and I'm comfortable to say that, yeah, the person asked me on the Discord, I think we could rip higher. So as long as we close, right, break above here, we could target new price discovery And if it comes back down, retest, I think that would be wave 5 for a leg higher. So that'll be my analysis on Dole, the Fruit Cup. I didn't know the Fruit Cup is that strong, guys. Good. This is a very cool play that you have right here. So thanks for sharing me this stock. I'll have this in my ticker list. But you see, higher lows, higher lows, higher lows, higher lows. We're gonna form a mini higher high over here. So I guess a thing you could use with Elliott waves, Astro Tabi, right? If you're to calculate the distance, wave 3 being the longest, right? If this is actually a very long wave, wave 1 to 5 will probably go like this. Yeah. Wave 1, long wave 3, and then wave 5. But obviously it's going to be a bit more extended, so be something like this, I guess. But I would say this is in wave 3 because, right, we're making increments higher lows, right? So we went over Netflix, Nvidia. What other stocks should we look at? Let's go at SoFi, okay? People are like, SoFi's doing nothing. Guys, it made a massive rally from, let's see, April lows. Oh, this is Costco. I'm like, what stock am I looking at? But from April lows, we're up an insane amount. From this analysis, look, guys, you guys are so spoiled. You guys are like up 250%. But from this analysis, we're gonna look at, right, bear market 2022s. I think we're in wave 5. I think we're gonna see a correction. Maybe first quarter into Q1, right? First quarter into first 1 or 2 quarters maybe into 2026. So I just wanted to retest these zones, alright? We have a zone which we wicked and tested these highs. Went up and we're coming back down, right? I think this wave 5 is over, guys. So we gotta go in for a retest at support, okay? So don't be chasing these hype stocks, please. That's why Adobe is going up and people are like, but my SoFi is going nowhere. So yeah, Lululemon, unfortunately, they've been doing too good. I had a spread set up on these harmonic patterns, like high probable trades, right? Really high probable support zones that I know I have a good chance of winning, like free 40, 50% ROI on these, as long as the price closes above these key zones. But look at that, we're closing up higher. I don't know. Put this in your ticker list. If we go back to 140-ish or something, then maybe this might be a spread play because it's an expensive stock. I cannot run wheels on, so I might take a spread on this one. Tempest, I told you guys we sold at 85 on this play. If you watch our channel post, I sold at 85. I recently bought back at 60 something dollars. It doesn't look too good for now, but hopefully it stays strong, you know? But I alerted the guys in our server to buy at $65, $66. So Salesforce is another one. I told you guys I'll be dollar cost averaging. I added Salesforce to my list to daily cost average in my larger portfolios. So in the larger portfolio I'm managing, I'm DCing into Salesforce. Let's see. See, Tesla is going crazy. I think it could hit $500 soon. That's my prediction. Right, one leg up, wave 3, wave 5. So the QQQ on the daily, it doesn't look too good, guys. I think this might be a double top, guys. It's just my opinion. could probably retest, right, these gaps, right, fair value gaps. And then we have a support zone over here, $580. It is what it is, alright. Yeah, and I alerted guys to buy Novo Nordisk. Look at it. Novo Nordisk is pushing up while tech is going down. But I really like this descending pendant, this descending channel, and then we have a high tide for support zone. People said this looks like a Christmas tree pattern or whatever, but we got pretty good, right, support zones for almost half a decade, alright? And yeah, my average is around $51, so I entered here. So my plan is just to, right, we could spot trade these up, right, until it breaks out, and then we could ride the wave up, okay? So looks like a pretty good stock. I think some people are running leaps on this. On another portfolio I'm managing, I just bought spot, and then we could ride this wave back up to a higher low maybe, or higher high. We'll see if we break out this ascending channel from this support zone. So over here, Novo Nordisk, and they pay pretty good dividends, so it's a dividend compounder. HIMS, I'm running wheels on another portfolio. I don't know, but we got a little harmonic pattern here. Shout out to Narquius for this setup. We bounce back. I don't know. Hopefully this is not a bear flag. Otherwise a bear flag will take us pretty low. But at these $30-ish, I think they're a good grab for if you want to be a wheel strategist for wheel plays, okay? Costco, I'm kind of interested, right? Let's see, Costco, Nasdaq, right? It's been a very strong stock for the past half quarter, right? Not for the past, right, half year. It hasn't been doing too much. I think these are my buy zones if I were to get into Costco. I'll tell my mom to buy. She owns Costco. I like that stock long term, right? They give really nice, right, I think couple of years they give really giant dividends back to their shareholders. So over here now, be okay zone to buy back over here 800. If we could get this zone around $600, it'll be a massive buy opportunity. All right, so these are my buy zones for Costco. Okay, look, it looks parabolic. This chart is insane. And Target, I think I guys shared you Target. I was buying dollar cost averaging. We're up 6%, so this is a really nice dividend stock. They're paying us really well also, dividend wise. You see, we got a support block here from over 10 years ago, guys. Look at this, 2019 support. I drew this out. And if we go back lower, Gartley pattern, I'll probably buy a bit more, just to park some money on dividends. So on another portfolio I'm managing, this is my dividend play because the value, right, the risk reward is getting pretty good for Target. Yeah, I told you about Salesforce. I'm dollar cost averaging into that on another portfolio. But I think that's about it for my video. Hope you guys enjoyed learning, right, what a put credit spread is. And I'll catch you guys next time, alright? Peace out.